Hi, my name is Kristin Jamieson with Success Mortgage Partners, and today we're going to be talking about some of the reasons somebody might want to refinance even in an increasing interest rate environment. As many of you have watched, interest rates have gone up substantially since the presidential election and even more so recently, but there are still some reasons why people may want to refinance. The number one reason, as we've watched the economy stabilize and interest rates are going up, we've watched property values go up, sometimes in excess of 10% a year over the last couple of years in certain markets. So one thing I'm seeing more and more people do as far as refinance is taking cash out to eliminate their debt. They may be, extending their term a little bit or increasing their mortgage balance, but they're rolling in and paying off some of their higher interest rate credit cards or installment loans, effectively saving them thousands in interest payments on those credit cards. So cash out debt elimination is definitely still one of those reasons people would look to refinance in an increasing interest rate environment. Another thing we're seeing people do under the new proposed tax plan in 2018, one of the only deductions most people are going to have, unless you're self-employed, is your mortgage interest paid deduction. They have eliminated the mortgage interest paid deduction on second mortgages. So we're watching a lot of people come in to combine their first and their second mortgages now that they're in the equity position to do so. So that's increasing their mortgage interest paid deduction on their first mortgage and not leaving any deductions on the table by keeping their second mortgage. So combining a first and a second mortgage is definitely another reason to look to refinance in an increasing interest rate environment. One of the last reasons we're seeing people refinance is a reduction in term. We did just come out of a pretty big recession that lasted many years, and so a lot of people did a 30-year mortgage to keep their payments affordable and make sure that they could stay afloat in their home and in life. And as the economy is stabilizing, they're making a little bit more money. We are watching some people look to refinance to reduce their term from a 30-year mortgage to a 20 to a 15-year mortgage. Their mortgage payments would go up if you're lowering the term. In some instances, they may not, depending on what the interest rate is that they're currently paying on their first mortgage. But they're wanting to, have their home paid off before retirement. So, reducing the term and refinancing into a shorter term is also a great reason to refinance in an increasing interest rate environment. If you or anyone have any questions in regards to cash out refinances or cash out refinances, please don't hesitate to reach out to myself or my team at 352-242-1535. Thanks and have a great day.